Hello everyone. In this video, I'm going to walk you through my top-down analysis from the higher time frame all the way to the lower time frame for entries. So I'm going to use these week's trade as real examples. And I want to tell you guys that the process is repeatable for every single week. It's not only unique to this week. So if you want to learn more from me, you can join the 6 weeks intensive ICT SMC program. You're going to have 4 weeks of learning and 2 weeks of market review, commentary, and live trading. So this program is good for anyone who is an ICT trader. You struggle with entries, you struggle with consistency, or you just want to learn a new trading strategy. So this program has really helped a lot of students. This is just some of the reviews that we have from our students, and it will actually make things more clear, especially if you trade ICT SMC. So the first thing, of course, that I do every single week, I need to do a weekly outlook. So the point of doing a weekly outlook is to identify buyers for the week and also to identify daily key levels that the market is likely to react from before we get the move for the week. So for weekly outlook, I always upload my weekly outlook here on YouTube every Sunday. So if you've been following me for some time, I'm sure you know about that. So the point of doing weekly outlook, first of all, is to come up with bias. And the main thing that I use to come up with bias, of course, I use market structure for the higher time frame, and I also use order flow. So whenever I'm doing the weekly outlook, I have to do my top-down analysis from the higher time frame because it's a new week. I start with the weekly time frame, and every week looks different. But the main thing here is market structure. Market structure is what guides us, and also understanding internal range liquidity and external range liquidity. So, for example, let's have a week that is bullish, and so far you find the week the market has made a higher high. So anytime a market has made a higher high, the next thing you anticipate is a retracement to an internal range liquidity. And then once the market has retraced to the internal range liquidity, from there, you want to see a reaction for the market to continue going higher. So if this is the weekly time frame, and this is what we have so far, if you move, of course, to the lower time frame, let's say the daily time frame, this move here on the weekly, by the time you're looking at the daily time frame, you expect that there should be a bearish order flow. So what does a bearish order flow really look like? So a bearish order flow, you want to see the market on the daily time frame already is showing a bearish structure, and this market is respecting bearish PDRA, so bearish fair value gaps, bearish order blocks. You will see that that is what is pushing price lower. So if that is the case, and you also find that the market is also inverting bullish fair value gaps on the daily time frame. So if we have that, and let's say this is how the week ended, at that point, I'm going to identify a bearish fair value gap or a bearish order block, whatever it is, that is now the key level. And then at that point, we want the market to target, and that should be used to do what? To push price lower. Because at this point, our draw of liquidity is maybe this weekly fair value gap in this example that we have here. So then that is the first key level that I identify during the week. So once we identify this key level, we want, in the course of the week, we need the market to retrace, tag this, and we get a reaction from this point. But most of the time, your daily key level price should target between Monday and Wednesday. So the next thing is you wait for price to react from the key level. So that means if it takes Monday to get here, so that means Monday you don't have a trade until finally price tags this key level. Once price has tagged this daily fair value gap, the next day you move to the lower time frame. So there's something called time frame alignment. If daily time frame is your higher time frame, 1 hour is your lower time frame. So in this case, the lower time frame is the 1 hour. So you're going to move to the 1 hour, and in the 1 hour, you're going to look for confirmation, and that is where we're going to get our entries. We're going to talk about that in the examples that we do. So once you get that, once price is tagged here, we're going to look for entries, and this is how you're going to take advantage of this move to this draw of liquidity, which is our internal range liquidity. So if price takes the full week to finally get here, the next week again, when you're doing your weekly outlook, what do you expect? You anticipate that you are likely to get a bullish reaction from this point here, because clearly this market structure is bullish. And this will just look like it was a retracement to an internal range liquidity. So from there, you anticipate the next week should be what? Should be bullish. So again, the same thing. You'll be looking for a bullish order flow and identifying bullish fair value gaps that is likely to do what? To support that bullish price action. And now that that is clear, I want us to now look at the price action this week and I show you how I approached the market. So I want us to start with GBPUSD. So this is this week's price action weekly outlook. So this is what we had identified. We wanted to see price tag this inversion fair value gap. Then we get a bearish move, and the target drove liquidity was this weekly fair value gap that you see here. So if we look at the charts here, you can see on Monday actually price tagged this inversion fair value gap. So once price tagged this inversion fair value gap on Monday, so Tuesday I moved to the lower time frame, which is the 1 hour, and look for my entry confirmation. So what exactly are these confirmations on the lower time frame? So when I move to the lower time frame, I look for liquidity sweep. I look for change in state of delivery. Although not always you're going to get CISD, so CISD is not compulsory. I also look for SMT, but SMT also is not compulsory for my strategy. And market structure shift. So market structure shift is compulsory. So market structure shift and liquidity sweep is compulsory for me once price has tagged the higher time frame key level and the candle that tagged that higher time frame key level has closed. So I'm going to use FX replay so that I can show you guys how that trade played out in real market. So when you come to your chart on Tuesday the next day, you can see price tagged the inversion fair value gap on Monday, and this is the kind of price action we had. So on Tuesday, London session starts at 2 a.m. New York time. So all these will already have played out by the time you come to your charts. So we need to identify liquidity sweep. As you can see, as price was tagging this inversion fair value gap, there was a sweep of this high. So this right here is what you're going to use for liquidity sweep. And then market structure shift. So even before market structure shift, we do have change in state of delivery right here. You can see all these consecutive bullish candles the moment we closed below it. So this is change in state of delivery. We also had SMT with EURUSD. So at this point, I have all the confirmations I need. So once you have all the confirmations you need to identify next a PDRE that you can use for entry. So in this case, where price is at the moment, you can see we have this fair value gap right here. And of course, already price has already closed above this fair value gap. So at this point, I would use this for entry. This is what I used for entry. Stop loss above this swing high that created the market structure shift. So stop loss is above there, and risk reward is, so this low is good enough. So up to this point, that is 3R. So I just want to show you guys the thing as I was doing it in real time. You can see this screenshot was taken on February 3rd, 2:12 UTC -5. So that is 2 a.m. New York time. That's when I took this screenshot, and that is the time when I identified my entry. As you can see, this fair value gap is what I used for entry, as I've showed you in the backtesting software. And stop loss is above this high, take profit is right here. So let's see how this played out. So back to our backtesting software. If you play this, you can see finally, that is it. I got stopped out. And that is why you need to have a stop loss. That's the point. That's the whole point of having a stop loss. So that's Tuesday. Let's look at Wednesday the next day. So for Wednesday the next day, as you can see, this is a screenshot of a class I was having with my group members, and this is what we identified. So this is the 4-hour time frame. And I'd marked this for a fair value gap that I want the market to tag and give us a move. So which means the next day, Wednesday, you're still looking for bearish moves, but now we're using 4-hour fair value gap as our higher time frame key level. So we're going to use again the FX replay for this. As you can see, price tagged it at this time. So of course now we're on the lower time frame. Once price has tagged this, we need to move to the lower time frame and look for entries and confirmation. If you identify a 4-hour time frame key level, the lower time frame is 15 minutes. So you're going to look for confirmations and entries on the 15 minutes. So on the 15 minutes time frame, liquidity sweep, you can see we sweep all these highs. That's a liquidity sweep as price tags this for our fair value gap. Then market structure shift, we can use this for market structure shift right here. And apart from that, so after we get market structure shift, we now need to identify a fair value gap, breaker block, any PDRA that we can use for entry. As you can see here, there's this fair value gap right here. And also there's another fair value gap right here. And also there's a breaker. All this is breaker. So there's a lot of PDRAs here, right here, that we could use for entry. So we can decide to use this fair value gap here for entry. You can either use this or you use this. So whichever, any that you decide to use. Let's say we use this and the stop loss is above this high here. Take profit. We can target all these sell side liquidities here. Monday low. So Monday low is still a good target because for this trade I actually made 4R. So this can be still a good target. So let's run this and see how this played out. So there we go. So the next day, Thursday. So this trade will be holding on to it to the next day, Thursday. And finally, TP hit. So I also took EURUSD trade on that same day of 4th February. I want you to see this. This is a 4-hour fair value gap I had marked. So I wanted to see the market react from this 4-hour fair value gap. So let us move to the FX replay and see how we would have approached this. So you can see this is the 4-hour fair value gap. Price already tagged it. Then we move to the lower time frame, which is 15 minutes. So on the lower time frame, you can see you have liquidity sweep. So you can see price sweeps this high. This is a previous session high. We sweep that high. Then market structure shift is right here. So at that point, at this point here, so you can use any PDRE for entry. So you have this fair value gap. You can put your limit order or you can wait for market order. Stop loss is above this high. So take profit for EURUSD was 1:2 right here. So you can see finally price tags us in. So finally you can see price tagged our TP1, which was here. So that is all I'd prepared for this video. If you enjoyed this video, don't forget to give it a thumbs up. If you have not subscribed, please subscribe to this channel. I'll see you in the next one.